Yeah, so there's basically, if you look at Wall Street forecasts of year-end S&P 500 targets, there's no correlation between what they forecast and what actually happens. And I don't consider myself any more of a forecaster or a crystal ball reader than them. So I don't really give year-end targets or specific drawdown levels. What I do say is whether or not I think the risk, basically, what is the overall kind of balance between risk and reward? And since December, in my research service, I've been cautioning, basically pointing towards defense for a few reasons. Basically, we started to get the PMIs rolling over. The fiscal stimulus build back better fell through. So we're looking at a period of the Fed tapering their asset purchases, lack of ongoing fiscal stimulus, and PMIs rolling over. You also have things like the copper to gold ratio, kind of showing flagging momentum, after a long period of copper outperformance, it's kind of shifting back to neutral in gold's favor. And so a lot of those indicators suggest a risk-off environment for 2022. But that could take the form of some people calling for a crash. I don't rule that out. I think that also can just take the form of a choppy, sideways, grinding market, right? So if you look at these indicators over the past decade during this kind of structural bull run we've been in, those risk off indicators, instead of having a crash, they'd have this kind of choppy, more volatile, sideways type of S&P 500 action. And so I have little way of differentiating between which one of those outcomes occur. You could even get a positive year just at a slower pace and a kind of a zigzag way of getting there. So I don't have a specific target other than I am considering 2022 to be a more challenging and riskier year than the prior 2 years. And I think defense is warranted.
Gareth, what's your view on the Fed and inflation and how that's going to impact stocks?
So yeah, I'm in the camp where the inflation likely does come back in, as I mentioned. So I don't think it's coming back to 2%, but I think that for the most part, that's going to take a back seat. The question again is, how does it impact the markets? The markets, again, it seems to me like you're going to likely see yields get up to about 2.25%, and then the Fed's going to probably have to put the brakes on interest rate hikes. So I'm in that camp. I do think you see more volatility before the Fed does that. And I think the markets are really queuing off. One of the things that struck me is that if you look at when the equity markets, the NASDAQ, really started to collapse the S&P.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Was when the Fed came out and said, hey, listen, we're not only going to taper, but we're going to raise interest rates and we're going to roll off our balance sheet. It was that roll off the balance sheet that really surprised the market. And it makes the market think that the Fed didn't have any clue whatsoever, right? It's that kind of surprise. And so I think the Fed has to reestablish their credibility to some extent. I mean, think about how many times the Fed has been wrong. And these guys are supposed to be the smartest in the room. They said, oh, it's transitory. It's transitory. Don't worry about the inflation. And then, myself included, amongst many people were saying, listen, it's not transitory. And all of a sudden now they're saying, oh, it wasn't transitory. Whoops. And again, for the market has been guided by the Fed, thinking the Fed has always understood and knows the right path. And I think the market's beginning to question that. And it's going to be interesting to see, can the Fed get their credibility back? Can they get inflation under control without tanking the economy?
In the history of fiat currencies, if you look back at hundreds of years, the history of fiat currencies tell us that most fiat currencies devalue to zero. By 99%, almost zero, down to zero. Now, the US dollar, they say long-term is no different. First of all, do you agree with this view? And suppose we do get dollar devaluation, where do we go?
Well, it already has lost 90-some% of its power since inception. So it's already in that camp. The question is, will it continue to happen? I think just like any other fiat currency, it's going to devalue over time. Whether or not you're comparing it to real assets or other currencies is kind of a separate topic. So you can have a declining dollar index. You can have a rising dollar index, meaning it's strengthening versus other currencies at a time when all currencies are devaluing versus, say, gold or real estate or stocks or whatever the case may be. My overall kind of base case is that in the next couple of years, we're probably going to enter a dollar bear cycle. It's something I continue to monitor, though. I think that, currency trends are not something that I want to stand in front of. It's kind of like standing in front of a freight train. So I want to see price action start to roll over. So it's something that I continue to monitor. Basically, there's a couple key variables to watch. One is things like rate differentials and quantitative tightening. So basically the things that the Fed can control. And that's why a lot of people are dollar bullish right now, because the Fed's kind of, talking about being hawkish, at least relative to, say, the ECB or the Bank of Japan, which are some of the big currency pairs. On the other hand, it's also dictated by capital flows, right? So if the Fed's hawkishness puts pressure on the NASDAQ, there's so much capital around the world kind of pouring into the NASDAQ, pouring into US tech stocks over the past several years. And if that capital decides to go into value, decides to go into other markets, you can get a dollar weakening period.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.